Let's talk crypto. It's a world of innovation, a realm of digital possibilities, and a landscape that's constantly evolving. It's 2025, and digital currencies are everywhere. They're not just a futuristic concept anymore, they're integrated into our daily lives, shaping the way we transact and invest. You hear about Bitcoin, Ethereum, the two giants that have paved the way for this digital revolution, and new coins all the time. Each one promising unique features and opportunities vying for a spot in the ever-expanding crypto universe. But how do you actually get started? It can seem daunting, like entering a maze with countless paths and unfamiliar terms. That's where exchanges come in. They are the key to unlocking the potential of crypto, offering a platform to buy, sell, and trade digital assets. Think of exchanges as the front door to crypto, the welcoming entrance that guides you into this exciting world. Want to buy your first Bitcoin? Or perhaps a fraction of one? You'll need an exchange, a reliable and user-friendly platform to facilitate your transaction. Want to trade coins? Maybe you see an opportunity to profit from the fluctuations in the market. Again, you'll use an exchange. It's your go-to hub for all your trading activities. They make crypto accessible to everyone, breaking down barriers and empowering individuals from all walks of life to participate in the digital economy. Without them, buying or selling crypto would be slow and risky. Imagine trying to find a buyer or seller on your own, navigating a complex and unregulated landscape. Exchanges connect millions of buyers and sellers in one place, creating a liquid and efficient market for digital assets. They make trading easier and usually safer, implementing security measures and protocols to protect your funds and data. In 2025, exchanges are vital bridges between traditional money and digital assets, allowing you to seamlessly convert your fiat currency into crypto and vice versa. They handle billions in trades every day, a testament to their importance and the growing adoption of cryptocurrencies. If you want to navigate crypto, understanding exchanges is essential. It's the foundation upon which you'll build your crypto journey. So let's dive deeper into what these platforms are and how they work, unraveling the complexities and revealing the inner workings of these essential tools. Ready? Let's go. Prepare to embark on a journey of discovery and unlock the secrets of crypto exchanges. Now let's talk CEXs. These platforms are often the first point of contact for individuals venturing into the world of cryptocurrencies. They offer a relatively simple and straightforward way to buy, sell, and trade digital assets. Centralized exchanges. What exactly are they? These are the big names you hear about, the ones that dominate the crypto news and discussions. Coinbase, Binance, Kraken. These platforms act as intermediaries, facilitating trades between buyers and sellers. Think of them as traditional companies, but for crypto. They operate much like a stock exchange, but for digital currencies. They have offices, CEOs, employees, dedicated to maintaining the platform and ensuring smooth operations, and follow regulations. This regulatory oversight aims to protect users and maintain the integrity of the market. Signing up is like opening a bank account, a process you're likely already familiar with. ID required, KYC checks. KYC, or Know Your Customer, is a standard procedure to verify your identity. You deposit your money, dollars, euros, whatever, to fund your trading activities, and start trading. You can buy and sell various cryptocurrencies against other cryptocurrencies or fiat currencies. CEX are user-friendly, designed for beginners. Their interfaces are intuitive, making it easy to navigate the platform. Lots of charts, tools to help you analyze the market and make informed trading decisions, and sometimes helpful customer support. They're there to assist you with any issues or questions you may have. Here's a key point, a crucial aspect to understand about CEX. CEX are custodians. They act as a third party, holding your assets on your behalf. When you buy crypto, they often hold it for you in their wallets. This simplifies the process of buying and selling. It's convenient, especially for frequent traders. You don't manage private keys for daily trades. This removes the complexity of securing your own digital assets, but it also means you trust them with your assets. You're relying on their security measures to protect your funds. They control the platform and your funds on it. This centralized control gives them significant power. That's the trade-off, a fundamental consideration when using CEX. Convenience for trust. You're exchanging the responsibility of self-custody for the ease of use and accessibility that CEX provide. Now let's dive into the world of DEXs. Decentralized exchanges. These platforms represent a fundamental shift in how we approach cryptocurrency trading, offering a different paradigm compared to traditional centralized exchanges. No single company pulling the strings, no CEO making executive decisions, and absolutely no central office dictating operations. DEX are designed to be truly decentralized. DEX run entirely on the blockchain, leveraging its inherent transparency and security. This distributed ledger technology is the backbone of their operation. They operate using smart contracts, self-executing agreements written directly into code. These contracts automate the trading process, ensuring fairness and transparency. Forget the lengthy registration processes. You don't create an account with a username and password. Instead, you connect your own wallet directly to the exchange. This gives you immediate access to the trading platform. Your crypto stays securely with you in your own wallet until the very moment you execute a trade. You maintain complete control over your assets. The DEX automatically matches buy and sell orders, or more commonly, it uses liquidity pools and automated market makers for instant token swaps. This allows for seamless trading even with less common token pairs. Looking for popular DEX to explore? Uniswap is a great place to start, as is SushiSwap, and don't forget PancakeSwap, especially if you're active on the Binance Smart Chain. The user interfaces on DEX are often basic and straightforward, prioritizing functionality over flashy design. One of the biggest advantages is that you often get access to new and emerging tokens much earlier than on centralized exchanges. DEXs offer a greater degree of privacy and give you direct control over your cryptocurrency. This is a major draw for many users. The core idea behind DEXs is peer-to-peer trading, or more accurately, peer-to-contract trading, where you interact directly with the smart contract. You trade directly from your own wallet, eliminating the need to deposit funds into an exchange. The smart contract automatically handles the entire swap process, ensuring a secure and trustless transaction. There's no middleman holding your funds hostage or potentially manipulating the market. This is the essence of self-custody. You are in complete control of your private keys and your digital assets. In the world of DEX, you're essentially your own bank, managing your own assets and transactions. This level of control is incredibly powerful, but it also comes with inherent risks. More responsibility falls squarely on your shoulders to manage your keys and secure your transactions. That's the essence of the DEX experience. A new frontier in cryptocurrency trading. It's a world of freedom and risk where you have the power to control your own financial destiny. CEX versus DEX, let's compare. 4 key areas: safety, speed, cost, and control. Safety: CEX are big hacker targets, but many have insurance and strong security. DEX: you control your keys so there's no central honeypot, but smart contracts can have bugs. Speed: CEX are fast. Trades happen off-chain almost instantly. DEX rely on the blockchain so trades can take minutes, but layer 2 solutions are speeding things up. Cost: CEX charge trading and withdrawal fees. DEX use gas fees, sometimes high, especially on Ethereum, but other chains are cheaper. Control: on a CEX, they control your funds and can freeze accounts. On a DEX, you have full self-custody. No one can freeze your assets. Each has pros and cons. Choose what fits your needs. Let's see how people use exchanges. Sarah, a beginner, uses Coinbase, a CEX. She connects her bank, buys $100 of Bitcoin, and feels safe with customer support. Mike, a crypto veteran, uses Uniswap, a DEX. He swaps Ethereum for new tokens, values privacy, and controls his assets. Company X needs to buy large amounts for their treasury. They use Kraken Pro for better liquidity and support. Alex, a DeFi enthusiast, uses DEX like PancakeSwap for yield farming and staking, chasing high returns but accepting higher risks. Different users, different needs. CEXs and DEX both have a place. What's next for exchanges in 2025 and beyond? CEX are focusing on regulation, licensing, and user protection. More KYC, proof of reserves, and insurance. They want to build trust and attract big investors. DEX are improving user experience and lowering gas fees with Layer 2 solutions like Arbitrum and ZK Sync. More innovation is coming. DEXs are adding complex products like derivatives and lending. Hybrid models are emerging. CEX interfaces with DEX liquidity, or CEX is offering self-custody wallets. The future is a blend, more choice, more control. So CEX or DEX, which is best? There's no single answer. It depends on your needs, experience, and goals. Beginners often start with CEX like Coinbase, easy to use, familiar, and supported. Experienced users or those valuing privacy and new tokens may prefer DEX like Uniswap, but DEX require more responsibility. Manage your own keys, understand risks. Start slow, use strong passwords, enable two-factor authentication, and only invest what you can afford to lose. Crypto is volatile. Keep learning and stay safe.